Hey guys, it's Kieran. I'm just going to do a quick market update. So looking at the Bitcoin chart, we've been pretty much range bound the last couple 10, 14 days, essentially. And so if you look at this, we have this peak around here, so 31.4k, bottom of the range around 29.9k. And if I draw fixed range volume, actually, pushed above here, found support here. So if I draw from here to here, you can see how most of the volume and transactions are occurring here. But for the high probability setup, you want to be trading as far away possible from the range as possible. I know some of you are quite apprehensive because you perhaps might have sat out this false breakout trade of this peak, but I think the more lucrative trade is potentially an actual false breakout of this particular peak here. I think it's more of the high probability setup, and so it's okay not to take part in every single trade because it's about winning the war, not necessarily winning every single battle. And most of the time when we're in this tight range, I'm mostly focusing on other assets, like for example gold, XAU, other assets, because it's about picking your battles, and it's very easy to get chopped up here. And so I'm still in my head short from 31,136. I'm just letting it run. I've got a wide stop loss. So we'll have to see how that evolves, really. Looking at certain key levels, particularly from this week, I would say, first of all, we have certain new daily levels, of course, as well, to be aware of. So I think the main ones are here. So for this is 31,747. So I've taken this from the run-up in 2022. So in 2022, we actually had a run-up. And I've taken essentially from this open and this daily open and close here. That's a key level. The next sort of daily level that I also want to be aware of is this one here. So around 29,875, we pushed above and we found opened here, closed here. We found support here, and we pretty much this was a support region. So pretty much range bound, particularly between this range and this here. And of course, July 4th is bank holiday, so there's not much going on. In terms of actual Gaussian channels, something else I want to also talk about as well. So looking at the 5-day Gaussian channel, we broke out of this top band. We had a run up of roughly 20% here. Then we actually backed us to the top band, then we ran up again. And so I explained my statistics, how usually in Bitcoin history, once you break out of the 5-day Gaussian channel, you usually have a run up to 40%, or 30 to 40% usually. And that actually puts us at about 35 to 36k roughly. So far we've only got 20%, but sometimes what happens is when you break out, you get it back to the top band, and this is what's essentially happening here. Do we get new lows for Bitcoin this year? I don't know. I mean, this is why the question is it about ego? Is it about being rich? Because the mid band here is on 22.8. Maybe if there's a black swan event or something, we get a move down here, or the worst case potential situation, maybe 19.5. The thing is, you don't want to bank on the fact that you're going to see a move to 12k, because it might not happen. And that's just, the market never gives what people want, essentially. Because when we were here, right, so around 15.5k, what was everyone saying? Everybody was saying, oh, well, Bitcoin has to go down to 14, 12k. And I myself thought it was reasonable to go to 14k, but it didn't happen. It actually front ran it by 1k, right? And essentially here, now a lot of people are thinking it's going to go to 34, 36k. So 31k is essentially the double of that low value. And what if this is just the peak in for now, right? And I mean, of course, in Bitcoin history, what happens is if you draw Fibonacci retracement, essentially from, so I'm just going to go to the weekly chart here actually, but if you draw Fibonacci retracement actually from the peak here, so the high of the bull run to here, usually in Bitcoin history it goes to the 0.5 and or 0.6 when it Fibonacci retracement, like across the last 5-6 iterations, and so far we haven't even tagged the 382. So I would expect a tag of at least the 0.5 this year, but the exact route is hard to know in advance, right? It never goes the way people want it to go. And what I will say is, you don't have to take part in every single trade. You don't have to. I'm still in my swing short, and I also took part actually in my dot long as well. So I actually shared the setup with a lot of people in real time. So essentially, I explained how, particularly on the daily chart, we had this key order block here. So essentially, this area of demand before run-up. And then we essentially took out the structure here and taken out this high. And we came back down eventually. So I required a lot of patience. And then I essentially looked at this, and and this was a key order block. And I went to the 15-minute chart, and I essentially just looked for a break of structure, and we got that. And so far, we've got a nice run up. And I was actually underwater in this trade for 5 days. And it just shows patience is very important. And I really like the way, for example, we got that wick above this low. It's like a false break, and we've come back in. And so sometimes this happens, this was also near a yearly low. So is this the low in for DOT for this year and this bear market? Well, I mean, we'll have to wait and see. Nothing is guaranteed, but for me, I'm just going to let this trade run. It's quite a, I've got my actual take profits and everything set in advance. So essentially I'm scaling up between 9 $8 $9 to $32, and it might be the case to hold it for 1 or 2 years, but we'll have to wait and see. A lot of patience is required. And just looking at the SPX, so the SPX essentially, you can see here we had that key weekly level around 4.3, and I explained how it was a potential short setup, but things we went straight past through it, and so a lot of it depends on the reaction. You don't want to just blindly short things, so we went past it. And this, when we're in this range essentially from 2021, it's 2022, this was a value area low of that range, and so we went above that, back tested it, and so this is a point of control, so 4.4k is a key level. And in theory, if we break above, there's very little action in the way till just under 4.7k, so 46660, and maybe that might be a potential short setup if we get a false break out of this peak, and we'll essentially target it back to the daily level here. So we have to wait and see. So far this structure still seems bullish and to prove otherwise. It could be a situation that people are in a lot of denial that essentially just FOMOing in because they think they missed a bottom, and they could be in denial they think there's going to be a crash. So from my experience, whenever you're near a low, it never feels like the bottom. Whenever you're near a peak, it never feels like the high. So far, the structure's still bullish. We've got a high, higher low, and we'll have to see where this goes, essentially. Let's look at the Dixie as well. So Dixie, essentially, it's that famous channel we always speak about, essentially. So if you look at the weekly chart, it's a channel here, and you can see how we're respecting this channel for pretty much decades, but we bounced off that, essentially, this daily level, so essentially like 102, and it also, I had that harmonic target that I spoke about. Essentially, I drew a harmonic, and it essentially hit my target. So for people who don't know, harmonics essentially look at Fibonacci's and key retracements, and we actually reached, slightly front ran 104.87 target, but it's close enough. But now the question is, do we stay above this support of this channel, or do we break down to 98.22? So if we break below here, I would say next low is 98.22. But then the thing is, we did slightly front run this 104.87, so a lot can happen, and perhaps we do get a move to key Fibonacci 618 retracement, so around 103 as well. Looking at the gold chart, essentially, so we have this kind of somewhat triple peak almost, and I would be a bit surprised if this is the high end for gold for this year. I would expect at least a move to the 1272 extension, so 2.2k or at least 2.3k this year, and so there's potential for a final leg up. We had to really hold this key level. This is also a key point of control as well from this whole range, but also it's near the 2011 peak, so I would expect, perhaps a potential bounce here, and then we'll have to wait and see. The question is, do we get a situation like 2018 where there was essentially like peaks like this, so one peak here, so essentially we had peaks here, but then we eventually just broke down, and so we'll have to wait and see how that evolves as well. In terms of the total crypto market cap, not a lot has actually changed. We're still around that 1.18 trillion is a key level of support, resistance, and we broke below here, and we're retesting that. So that's something to look at. This is also my black swan box. If we do get a breakdown eventually, it might not happen, but it's roughly been 460 to 800 billion. So this is a key area. I believe there will be really good discounts. Bitcoin dominance. I will speak about this in future, but essentially, I spoke about how essentially we had this huge run up, and I spoke about it so many times in the Discord and live streams. And essentially, in Bitcoin history, when we actually pushed above here in 2018, we bounced off this zone as support. And so naturally, it expects to have some kind of local resistance around this area of supply here. So if I just essentially draw the box here, so this is essentially we range bought here in this channel, and we pushed above to this area of essentially a supply area. But when we actually broke down here, there's actual very little resistance. Very little effort in breaking through the support. And so we went straight past through it. And a lot of people don't realize, a lot of people have actually only been in crypto essentially after 2021. And so people don't know what a high Bitcoin dominance actually looks like. And so when we actually broke down here, we actually only took a couple of weeks actually. And essentially here, I've actually drawn this, of course trend lines are all subjective, but I've drawn this channel essentially from Bitcoin dominance. So starting at this point, so from 2017, the second touch point is 2020, and so the next touch point is essentially here, so around 58%. And so I would expect a tag of that in the next 2-3 months. And it's also important not to be too heavily exposed to altcoins, because it's all about gaining Satoshi. And yes, I'm not saying altcoin valuations can go up in dollar value, of course it can, but relative to Bitcoin value, it can actually be bleeding. And so it's very important to look at these things. You have to always look at this, so ETH to Bitcoin dominance. Ethereum is essentially a market for altcoins. And essentially looking at this ETH to Bitcoin dominance, you can essentially see how we have this touch point here. So first touch point here, second touch point here, third touch point here, fourth touch point here of this trend line. We actually had this fake out like this. And at this point, I was saying actually how it's actually more lucrative to be trading more Bitcoin than Ethereum, because this was a huge resistance it was near. But now we've actually broken down this range. And so now it's not surprising to see how you get some sort of bounce, because it's a false breakout taking the liquidity from these lows. And you naturally expect some kind of run up in Ethereum because it bled in terms of Satoshi value. And you can essentially see how in particularly the Ethereum, it has had a nice relief actually as suspected here. Yeah, so guys, do check out my YouTube channel, which I set up recently. This is where I discuss my passion for crypto and trading, and really tips and tricks to really fast track your trading and investing career.